Welcome to Inside Startup Investing, the only podcast where you can invest in every guest. On this episode, I will be speaking with the CEO of CrowdStreet, John Imbriglia. CrowdStreet is truly one of the pioneering digital real estate platforms. In fact, it was founded back in 2013 when the idea of investing in anything online outside of stocks was still incredibly foreign. They led the way in building out one of the leading real estate investment platforms, and in doing so also helped to build the digital private market industry. But now CrowdStreet is growing up and growing out as it continues to evolve and innovate the alt investing ecosystem. With the new CEO at the helm for a little over a year, coming from iCapital, another digital infrastructure pioneer, John has set out on an ambitious plan to make CrowdStreet a top-tier institutional grade platform for finding not just real estate investments, but also private equity, private credit, venture capital, and more, all in one place. You could think of this as CrowdStreet 2.0, the only one platform for sourcing and investing in high-grade private market investments. And he is a like-minded individual to how we think about alt investing, recognizing that one of the keys to any sort of success in rolling out this 2.0 platform will be leading with tremendous amounts of education that makes these new asset classes accessible to a broad spectrum of investors. Put simply, if you want to access institutional private equity, venture capital, private credit, and commercial real estate investments that are professionally managed and vetted, CrowdStreet is where you need to be. Now, to be clear, this is only for accredited investors right now. But even accredited investors can't really access PE and VC funds in any way that makes sense. Oftentimes, funds require multi-million-dollar commitments. CrowdStreet is taking the first major leap to bring down minimums to 5 figures, creating a far larger pool of alt investors that can start unlocking these powerful asset classes today. But even if you aren't accredited, tune in, because what John and his team are talking about are simply a sign of the times. Where things go from here? Well, from my perspective, only more access, more investors, lower minimums, and most importantly, the variety of accessible investments to all of us will only continue to grow. So let's dive in with John to learn more about CrowdStreet as it enters its 2.0 era. So, John, thanks so much for joining us today.
It's my pleasure, Chris. Nice to be here.
So, for those who don't know you, can you give us a little bit of background about yourself and how CrowdStreet came to be?
Sure. So, John Imbriglia, I'm the CEO of CrowdStreet. I joined about a year and a quarter ago. My career, sort of first 10 years of my career, was spent on Wall Street at a few banks, including Mellon Bank, Lehman Brothers, Barclays. Then in sort of 2012, 2013, I helped start a company called iCapital, which is an online platform that makes it easier for wealth managers to access private investments. I was one of the first employees there and spent about 10 years there. Spent a few years as a venture capitalist after that, investing in these types of companies, and then joined CrowdStreet in the summer of 2024. So that's a little bit on my background. CrowdStreet was founded about 10 years ago and was one of the first platforms that made it easier for wealthy individuals to invest directly in the private markets. In CrowdStreet's case, the company started with really one asset class, which was commercial real estate, and sort of in that what I would call one asset class model, built a platform that attracted about 300,000 high net worth members, about 30,000 of which have made investments. And on the system, we've raised about $4.5 billion into a variety of real estate investment opportunities. When I joined, I was sort of given the mandate to, or what I joined because I saw an opportunity to actually expand beyond commercial real estate. I thought we could help our members sort of achieve other things in their portfolio outside of what they might want to do in real estate. And so we've spent the past year kind of retooling the business into a broader private markets platform. And so this fall, we've launched a new brand, new look, new feel. We're about to launch a brand new sort of advertising and customer acquisition campaign, sort of all around the private markets. And then importantly, this fall we've launched other asset classes as well. So in addition to commercial real estate, we'll now offer things like private equity, private credit, venture capital. and the idea is to build a platform where investors can come learn, understand, and access, a wide array of private investment opportunities.
So, it's certainly an industry that has had its challenges, right? As has our space and kind of the equity crowdfunding side of things. You all have come a very long way. Can you talk a little bit about your experience with some of the challenges in creating this direct to retail, real estate platform, where the friction points have been in the past, and how you're kind of evolving forward beyond some of those early challenges in the industry?
As we think about the business, and we've thought about this past year of, I would say, sort of CrowdStreet version 2.0. We think about the business across kind of three core vectors. So there's supply, demand, and loyalty. And so as we think about removing friction, or as we evolve, we think about sort of on the supply side. So what does that mean? That means the investment opportunities that we're going to present to our members. I think that, as we look to the future, we're sort of over-indexing on education, awareness, quality of due diligence, quality of underwriting. And so to that end, we've spent a lot of time in the past year, and we'll continue to do this, sort of creating a lot of educational content around the markets, around specific strategies. We've hired an investment consultant, Callan, Callan, which is one of the largest institutional investment consultants. They're 50 years old. They advise on over $4 trillion of assets, San Francisco based. They've been investing in private markets for decades. And so they're going to help us source and select private investment opportunities, much like they would help a university endowment or insurance company or a state pension plan. So now our members will get access to sort of their thinking, their network, et cetera. So we've thought a lot about, on the supply side, just really over-indexing on awareness, quality of due diligence, education, because the reality is our belief, that while most Americans, wealthy Americans, may want access to the private markets, that they actually don't know much about them, and they certainly don't know who provides access to the private markets. They don't even know sort of the big names. They might have a general awareness of some of the larger Wall Street names, but they really can't differentiate between them. And so it's sort of our mission to start at the highest part of the funnel, which is, what are the private markets? How are they different than public markets? How do they operate? Who are the players? Where something may fit in your portfolio? And so we talk about sort of removing friction. I would say it really starts at the top, which is just awareness and education, and then eventually filtering down into specific investment opportunity or fund overviews. But really, it starts at the very top. Then we sort of move into sort of what we call demand. And so how do you create demand? Now, I think education and awareness is a large part of that. But I think historically, our platform and other platforms, I think have done an ineffective job actually of marketing at a very large scale to the investor universe. And so, again, starting in 2 weeks, we're launching sort of a very targeted, large new advertising and customer acquisition campaign that's going to be omnichannel. It's going to be television, radio, print, social, and it's going to sort of meet investors, where we think they are in terms of awareness and education. And we've done a lot of work on sort of the psychographic and curiosity traits of our investor types. And so I think this sort of new demand engine we're building is going to be very, very different than perhaps previously how demand engines were built in this world. Whether it's our platform or others, I think at times folks like platforms like ourselves have relied on selling what I would call, sort of selling investment opportunities. Hey, buy this investment, buy X investment, buy Y investment, and sort of leading with that, as opposed to saying, here's why you should even care about the private markets. And so we're starting at a fundamentally different level, which we think will drive longer term loyalty for our members. And then there's sort of loyalty. And loyalty, among other things, has to do with the client experience. And so we put our members, who are our clients, at sort of the top of everything we do, sort of as in service of our members and helping them achieve their objectives. And that funnels through to having very high quality investment opportunities, having education, having the correct due diligence, and also having a good user experience on the system, from the moment they log on to the time they make an investment to get their investment reporting. And so we've re-engineered actually, I think over 80% of the technology platform since I got here to make it just a better and more friendly user experience. And so as we think about sort of friction points, another way to think about it is sort of the life cycle of an investment. So the life cycle of a private investment starts with understanding what are the private markets, to understanding the various asset classes, to understanding specific investment opportunities, to getting the correct due diligence on those opportunities, to having a good experience on the system from the time you log on to the time you get your investor reporting. And so there's sort of a few different ways to think about removing friction, but one maybe helpful way is sort of that supply demand loyalty matrix, as well as sort of think about that life cycle of an investment and trying to help investors along the way.
I think that's a really thoughtful approach, and certainly we've seen the same thing with just awareness and education continues to be the main hindrance to getting more people to want to partake. CrowdStreet really, from my perspective, kind of started out as a direct deal flow, go into these individual real estate issuer projects. Will that continue to be a part of your overall strategy, or is this really a movement towards more of these kind of fund, diversified products?
So on the commercial real estate side, we have thousands, tens of thousands of members who rely on us for those types of investment opportunities. So we'll continue to offer those on the system. We've got a great team in place that's got a very strong network of nationwide real estate sponsors. So we'll continue to offer those, but we're also going to diversify. And so for our members who rely on us for the commercial real estate opportunities, those will still be there. But then there's going to be a whole host of other options as well.
Something that I've always thought was interesting was kind of the private equity, private credit space. One of the challenges that we've often seen with it is even for high net worth, a fund will say, okay, yeah, our minimum check is $5 million, $10 million, right? And that's why they're going to pension funds and endowments, because they're one of the very few who could write those size checks. How are you kind of offering access at a point that makes sense for folks, and making that accessible? And then two, just from a mechanic standpoint, there's a commitment side to saying to a fund, yes, we're in, and then there's the supply side of, hey, we actually have the dollars to be in. Yeah. So how do you plan to manage that in order to offer those more, minimum check size offers?
It's a great question. So, over the past 10 or 15 years, there's been a lot of sort of what I would call product development in these types of offerings. And so historically, what you're referring to would be basically kind of a drawdown, closed-end private fund where they say the minimum investment is $5 million. We're going to have a 5-year investment period and a 5-year harvest, and we're going to do capital calls along those 5 years. Now that creates all sorts of operational challenges for high net worth investors. There's the minimum, as you suggested, which can be very high. There's the capital call functionality, which is sort of how do clients think about sort of like the liability that a capital call structure creates for them, in that you commit XYZ dollars today, but then the manager has 5 years to call it down. And also those types of funds tend to have K1 reporting, so you have to sort of delayed tax reporting. Now we will offer drawdown funds, that's what I'm going to call them, on our system. To mitigate some of those pain points, we'll create feeder funds or access vehicles to aggregate high net worth dollars into one vehicle that then becomes one LP, one investor to the underlying fund. That's a sort of one way to get around, the issue you're describing. But I think in a very good development for platforms like ours, like as sort of I mentioned, the product development piece, there's been a large number of funds that have been created, registered funds or interval funds or BDCs, that make entry into the private markets a little easier for high net worth investors, where there have been funds, by very large managers that have been set up that already have low investment minimums. They can take clients at $25,000 or $50,000 increments. There is no capital call functionality. The investments are funded all up front, and it's friendlier tax reporting. It's 1099, not K1. And so as we start sort of our journey into these other asset classes, those are actually the types of products we're starting with. So we're working with existing managers who have those types of offerings. We've done the due diligence on them, and then we'll make them available for purchase on our system, and our clients will be able to understand the offering on our system, review due diligence, and then electronically make an investment and get all their reporting on our system.
You're in a really unique position because you come from the world of iCapital, which I would argue is one of the better platforms that's created better distribution of private investments, right? You talk about kind of marketing campaigns and ways to acquire new investors, and I think that's great. One of my theses is just distribution is like at the core of all of it, right? Like there will come a day when you open up Fidelity or TD Ameritrade or a Robinhood, and you could just directly access the alt investments from the likes of a CrowdStreet or whoever it may be. How do you think about distribution and something like I just mentioned?
So when we think about distribution, or I would say it's slightly different, like who is buying our products, who is the end customer, and unlike iCapital or other platforms that have a large focus on the wealth management community, our platform is what we call a self-directed platform, wherein investors can come onto our system on their own, not through a financial advisor, and access our menu of options and decide which investments might be right for them. And so when we think about distribution, it's actually it's not as simple as calling XYZ place. It's not, we actually need to go out and speak to millions of Americans. We think actually the addressable market for our platform in the United States is over 5 million investors. And so in a few weeks, when you see our new brand story and advertising campaign come out, I think it'll shed a little bit more light. But we've done a lot of work on sort of the investor archetype. Who is the investor that may want to invest in a private investment on a platform like ours? And we have sort of 4 investor archetypes of different flavors. We spent a lot of time in the past year trying to understand where they live, where they shop, what their general behaviors are, and the advertising campaign we're about to launch this fall is sort of a direct result of all of that research. And so we'll be starting in 2 target markets in Pittsburgh and Boston, and our goal is to sort of surround our target customer in those markets in an omnichannel way, as I mentioned. So television ads, radio, social, Google, paid search, Google, print, billboards. And our goal is to hit our target customer 6 to 8 times a month in those markets. So ultimately, it'll be millions of what are called impressions against our brand, and we hope that drives sort of investors to the system. And then, as you might imagine, there's a whole other sort of funnel that they get into once they're on the platform, and we begin speaking to them and understanding what may be a fit for their needs.
I certainly have gotten a sense over the years from chatting with a lot of our kind of really active investors, which I think align fairly well with yours. And one of the notable points that always comes up is, the ability to invest from an IRA, but more importantly, for the experience to not be terrible. Yeah. I know that that's a lot to ask because you're involving a third party, but talk to me about your thoughts on IRAs and how you might make that experience more seamless for investors.
So it's something we've thought a lot about over the past year. We have entered in, well, you can currently, access our investments via an IRA, but it's kind of a clunky process. And so part of that technology platform re-engineering I was describing is making that process much, much smoother. We've also entered into an agreement with a very large provider of self-directed IRA services to be a private market solution provider to them. And so their clients will now have access, to our system. And importantly, on the back end of our system, if clients want to open an account at this firm to make an investment into our investments, our offerings, it'll be, what was previously a very clunky process will now be very seamless. And so it's an area, we've spent a lot of time this past year thinking about, and that this will be sort of our first big partnership in the space, which we'll probably announce later this fall.
I know you can't give us specifics, but if you don't mind, could you tell us a little bit more about kind of the profile of the individual issuer commercial real estate type projects that you'll still offer opportunities to? And then just a flavor of like, what do these private equity and private credit funds look like? Like what will be the style of them? Are these going to be mid-market private credit funds, so on and so forth?
Yeah. On the real estate side, we'll continue to offer, an array of, sub-asset classes within the space. But one thing that I think is perhaps an evolution of how we previously may have sourced is what we've over-indexed on, and I've asked our real estate team, to sort of think about this and sort of the sourcing going forward. We've sort of over-indexed on what I would call the quality of the sponsor. So as opposed to saying, we have a thesis on XYZ submarket, let's go find someone who operates in that submarket. The sourcing engine is now flipped, and it's said, let's find the 20 or 30 best real estate investors in the country and figure out how to develop deep partnerships with them and figure out what they're working on versus what we might be interested in, and think about it that way. So we've sort of flipped from style or project specific searching to just searching to work with the most high quality managers on the real estate side, whatever asset class they operate in, because I think ultimately there'll be a better experience for our members. And on the other asset classes, again, this fall we're launching offerings in private equity, private credit, and venture capital. We'll eventually expand into things like infrastructure, secondaries, GP stakes, sports. Obviously, there's a lot going on in the private markets. It'll be a range. Honestly, Chris, it'll be a range. It'll be some, very large funds from well-known names, diversified offerings, and in those various sub-asset classes, and then over time they'll be more targeted. You had mentioned mid-market. There'll be more targeted offerings. They'll perhaps be an emerging manager offering or a regional specific manager offering. The idea is, we have members, some of whom are newer to the private markets, perhaps brand new, perhaps this is their first private market investment. And so we want to give them opportunities to build, diversified portfolios in an efficient manner before taking, perhaps very targeted bets. However, we have other members who are very in tune with the private markets and might say, listen, I'm already diversified in private equity and private credit. I want to make a very specific bet on some venture capital strategy or some mid-market buyout strategy that I don't have access to. And so, our goal is to build a platform to sort of service, that sort of spectrum of members.
I think a criticism of kind of our overall industry, anything that was trying to create access to alternative investments, has been over-indexing the team on technology and under-indexing on experience in the asset classes they're getting into. Talk to me a little bit about what your team looks like and how you're kind of overcoming that perception.
Yeah, we've got, a number of folks like myself who have spent their careers at places like iCapital, or we just hired a young woman from Blackstone. We've got team members who worked at BlackRock, OxZiff, Goldman Sachs. So we actually have a lot of folks with very direct sort of Wall Street private investment experience, which I think is critical. Of course, we have a large team of software engineers and others who have different backgrounds, but very complementary. Another sort of way to answer that question is our hiring of Callan. As opposed to when we look to go into other asset classes, we felt it was imperative to have a very safe set of hands helping us navigate all these other sub-asset classes. So as opposed to building all that expertise internally, which would take a lot of time and money, and we decided to work with a third party. And so that's a huge sort of step in this direction as well for us. So in addition to having a team that have spent their careers at places, again, that sort of like I was mentioning, we now have a consultant that's been investing in the private markets, for decades to help us, navigate the landscape.
One thing that we've seen across the industry, especially in the late stage secondary sector, is the fee structures have gotten crazy, right? People are buying shares and then putting a 50% markup on them and saying there's no fees, but oh wait, the value is actually 50% less than what you're paying. In terms of fee structure, how are you protecting investors, and frankly, what does it look like?
Yeah, I mean, our fee structure, we're a broker dealer and an RIA, so our it's free to sign up for the system, and then our members, in the case of, for example, the registered funds and the BDCs we're launching this fall, they pay whatever the management fee is from the manager. There's no additional fee for coming through CrowdStreet. So in some ways, it might actually be cheaper to buy these types of products vis-a-vis CrowdStreet than perhaps via a traditional wealth management channel. And so, but when we're evaluating managers, obviously fees, is part of the analysis. I mean, they have to be sort of in line with market. They have to, be again, sort of, in line with what other similar managers are charging. And obviously Callan will help us, navigate any, discrepancies that we may see there.
If there are investors who are listening to this and they're curious, they'd like to get started, they'd like to get signed up, where can they go? What can they do?
They can go to crowdstreet.com. We recently we sort of unveiled an entirely new website and brand and look and feel, and so they can come check that out. And there should be a big bet. There's a button on the system, I think, that says register now, or click on that. And we've really streamlined the onboarding process. So what used to be somewhat cumbersome is now, I think, quite efficient. So they can log on and enter some information, and then be looking at education and investment opportunities in relatively short order.
If you like what you heard on the show today, you can check out CrowdStreet at crowdstreet.com and sign up if you are accredited to start investing today. And as always, if you like what you heard on the show today, please like, subscribe, and share our podcast wherever you listen so more investors like you can find us. Thanks for tuning in, and happy investing.